Vrtx at $197.97.
Hey guys! Welcome back to Bets on Wall Street. Today we will talk about Vrtx Pharmaceuticals, which is the Boston-based biopharmaceutical business. It was among the first biotech companies to adopt a rational drug design technique instead of combinatorial chemistry. It specializes in the development and commercialization of cystic fibrosis medicines. We'll find out more about this company in this video. So, let's get started. Vrtx was formed in 1989 in Cambridge and now has worldwide headquarters and foreign offices in Boston's Innovation District. The president and chief executive officer is Reshma Kewalramani. Vrtx is frequently ranked as one of the best places to work in the field. It invests in scientific research to develop life-changing treatments for those suffering from serious illnesses. The company has several authorized medicines that treat the underlying cause of cystic fibrosis, a life-threatening and rare genetic condition, and various ongoing clinical and research activities in the disease. Aside from CF, Vrtx has a strong pipeline of investigational minor molecule treatments in other critical disorders for which it has a profound understanding of human biology. Now we know what Vrtx is all about, but what about its performance in the stock market? Let us take a look. The fair value of Vrtx is $374.87 on Simply Wall Street. The sale price decided upon by a willing buyer and seller is known as fair value. Over the last 3 months, Vrtx has been no more volatile than the whole of the US stock market, averaging a plus or minus 4% each week. Over the last year, Vrtx's weekly volatility, which is 4%, has remained consistent. We can obtain a sense of Vrtx's future growth by looking at its consistent share price. Higher volatility indicates a greater likelihood of a market decline, while lower volatility indicates a greater chance of a market rise. Vrtx is now selling at a discount to its estimated fair value. It is currently trading at a discount of more than 20% to its fair value. This signifies that investors are paying a reasonable price for the stock about the company's revenue. But what about its future growth? Well, its estimates are 18.3% by analysts. Vrtx's expected earnings growth of 18.3% per year is higher than the savings rate of 2%. Vrtx's earnings are expected to rise at a greater rate than the US market, which is expected to grow at 14.7% each year. This value assists investors in determining a stock's market value about its earnings. In simple terms, it refers to the price that the market is prepared to pay for a stock today based on its previous or projected earnings. In 3 years, Vrtx's return on equity is expected to be 22.9%. It means that Vrtx is becoming more profitable when using less capital. It also demonstrates how well Vrtx management manages shareholder funds. The earnings from Vrtx are of superior value. Over the past 5 years, earnings have grown by 50.4%, so we can see that this company is growing. Earnings are the most crucial and scrutinized statistic in a company's financial records. It compares a company's actual profitability to analyst estimates, past performance, and earnings of competitors and market peers. So, the numbers are saying that the company is doing well. Vrtx generates high-quality earnings. The quality of earnings is deemed to be strong if a company reports an increase in profits due to higher sales or expense reductions. As health is essential for individuals, similarly for a company, financial health is crucial. This brings us to the liabilities. Vrtx's short-term assets are at $8.5 billion, and its short-term liabilities are at $1.8 billion. Vrtx has $8.5 billion in short-term assets versus $1.2 billion in long-term liabilities. As a result, Vrtx's short-term assets outnumber its short-term liabilities. It is good news as short-term liabilities should ideally be fewer than short-term assets. Vrtx is debt-free compared to a debt-to-equity ratio of 25.5% 5 years ago. Vrtx does not have any debt, hence operating cash flow is not required to cover it. It does not have to worry about without covering interest payments. This is a big relief. The management staff of VRTX is regarded as experienced with an average tenure of 2.4 years. It is evident in the growth of the company. The experience is shown in the performance. Vrtx Pharmaceuticals have a good team, but who is responsible for making the decisions? The board members. It is equally important to have an experienced board. Guess what? With an average tenure of 7.5 years, VRTX's board of directors is deemed experienced. In the last 3 months, VRTX insiders have bought more shares than they have sold. So, it has a positive insider buying value. Insider buying occurs when a company's management believes that the stock market is undervaluing the company's stock. The insider thinks the stock is trading at a favorable price and is a good buy. We can conclude that this film is a model for a thriving pharmaceutical stock. The company has steadily gained sales since going public, with annual revenue increases for the past 6 years, evident from the figures shown in this video. Guys, that's it for today. Thank you for watching the video. If you want similar videos, then don't forget to subscribe, like, and share. We will meet you in the next video. Goodbye!